Welcome to the Magnate Agent Podcast. My name is John Green Jr.
And I'm Brianna Green. And this is the Magnate Agent Podcast. What's up with us today?
It is the Magnate Agent Podcast that we can't talk today.
I know, but we got so much to share because this episode is all things what in the market. You see what we did there?
Yeah, hey, let's talk about the market a little bit because, it is the perfect time around maybe less than 90 days before a certain thing happens.
And let's talk about that a little bit because when I'm asked, how's the market, it's either on the basis of seller's market or buyer's market. But when you're asked, you're talking on those points like the election happening, which could sway or, determine the potential interest rates or the way of the economy. So when someone asks you what's going on in the market, how do you address that?
That's a great question, actually, because as of probably about the last 2 to 3 weeks, we've seen the rates come down and remain pretty steady. Mm-hmm. With a peak probably about 10 days ago. That Friday, when the rates started trending down, and then that Monday was the lowest it's been probably a couple of years. So we're seeing the market trend, the rates trend down, especially on the government side. Outstanding rates right now. Better than it's been in a while. I wouldn't say outstanding. That's back. I would say the rates have been competitive, and it's been cheaper than it has been, which is enticing more buyers to come into the market. So I've seen a spike in over the last month in refinances.
I was getting ready to say, because your phone is ringing a lot. I mean, you have plenty of pre-approvals and pending contracts, but it always goes down to what is the rate going to be. And so I think that understanding like how they're made up, where they come from, who determines them. I think sometimes even when consumers / buyers say, well, are you going to give me a good rate? Are you, as a mortgage broker, able to determine what someone's rate is?
So that's a great question. Rates are the same. You understand that, right? It's what's going to cost you to get that rate. So, the advantageous that we present, the advantageous opportunity we present as a broker is how much money we can save you in fees. How much does it cost to get that rate? So, if the posted rates right now, let's say is right around 6 1/10 or Section 3/8, what's it going to cost for that consumer to purchase that house,
right,
and achieve that rate? So it's not so much as rate, but what's it going to cost to achieve that payment? I think more consumers are more payment cautious than rate cautious. What's it going to cost me to afford that home?
Right.
So now we're talking about affordability in this current market.
Have you ever came across some of those situations where the house would be the same, the rate would be the same, but the payment is different when it comes to working with different consumers? And is that based on rate or is that based on?
What a great question. So, there's so many variables. Everybody's deal is different. Mm-hmm. So for me to say I can take a, average price in the market for Alabama is in Huntsville area is what, $370?
The average price point? It's about, I would say about $365, $325. It really just depends on the month right now, right. But it's in the threes.
So think about this from this perspective. If you got two different consumers, two different purchasers, two different credit profiles, two different, it's just everything's different in the deal, right? And the file. Even if they had, similar like credit, they may have difference in reserves. So, their deal may be different where they may do a down payment system because they may have a lack of reserves. So their cost is going to be a little bit different. The rate may be different. Well, this consumer may be, hey, I have enough funds for closing and down payment. They're less concerned with what they're getting from and the seller as concession-wise to assist with down payment, with the closing costs, which, in essence could make their deal less.
Right. So what should a consumer be looking for in those type of scenarios? Because if I'm showing a house and I'm showing them to two different people with two different profiles, if you will, what is the mortgage broker doing to position each of those different clients for the best rate, for the best price what does those scenarios look like?
Oh, that's a great question, man. And I'm gonna tell you why.
I want to always ask good correct questions.
I'll tell you what the best thing right now, and what we see, we talk about current market trends, is down payment assistance, right? 100% financing, whatever you want to call it, to assist the borrower into not having to put down the initial down payment and or closing costs. So down payment assistance is just not predicated strictly for down payment. Well, what if you have enough money for down payment but not closing? Closing costs is expensive.
Run that back, because I think that is important to highlight. Mm-hmm. So,
well, down payment, DPA, that's why it's called DPA.
Because everyone wants that program,
or 100% finance. Yes, they do. Okay, what does that come with? That's a higher risk. What people don't understand, that is you are more at risk trying to utilize and qualify for down payment.
Why? You
don't have any money.
Oh, okay. So as it relates to the banks looking at it, this person is high risk because they don't have the funds to purchase this asset.
So you got to think about it. What we're looking for, what actually makes sense for down payment assistance? Let's think about that for a second, because this is not you can't think of buying a home as buying a car. Mm-hmm. With a car, you can walk in and yes, you can buy a car with no money down, literally no funds.
Yeah.
Not the case with a purchase a home. So let's talk about these
Not
things.
always, because I've come to the closing table and my client, based on how we position the deal, not have to bring anything to close up.
Let's
but that's
talk about that.
But before we talk about that, I really want people to understand the down payment assistance. What does a person that qualifies for a down payment assistance profile look like?
Okay, perfect. So let's talk about the area we're in, right? So in our area, let's say Decatur. Decatur just launched a program for their specific area. Mm-hmm. Hey, we'll cover up to so much money for down payment assistance. Okay. Huntsville, you even looked it up, and they have one, right? So it's a lot up to the mortgage loan officer, but also the realtor to try to make sure they find what's best for their borrower, for their client. I'll take it one step further. As a mortgage broker / loan officer, it's their responsibility to understand the programs and know what the consumer can qualify for.
Right.
Not everybody will qualify for down payment assistance. Mm-hmm. If you look at the Alabama housing, it is probably one of the most strict programs to qualify for. Mm-hmm. And while everybody wants to use it, not everybody's going to qualify because the debt to income is really strict. Mm-hmm. It's really strict to qualify.
What is debt to income for someone that is under?
So that means, okay, you got how much total debt you have based on your earnings. They'll give you a certain percentage of that based on that, with the house including your escrows. Mm-hmm. So the max DTI under the Alabama housing is 45%, which includes the house. So, and you have to have a minimum credit score requirement of 640 credit score, FICO. Well, let's be honest. If you have a house, if you have a car, it's going to be real hard to get to that 45% DTI because, you may have a credit card, you may have another student loan. It's going to make it real hard to get to that. So, the one thing being advantageous as a broker, we have a number of down payment assistance programs that are available. Okay. So we're not limited to just the Alabama housing where we get, you didn't make that 40% after escrows, 45%, and your score is not 640. We can go down to a 600, okay? What does that mean? We understand that, maybe along the way there've been some bumps and bruises, but if you haven't had any collections over the last 12 months, and it doesn't limit you to being a first-time home buyer. You can own a home and say, hey, I don't have all the funds available, but I have enough money in reserve. So when you buying a house on down payment assistance, doesn't mean I'm gonna walk in, I don't have no money, because you will need some money for reserves. When I say reserves is how much of funds you have available for expenses to go along with the house. So let's use round numbers. Let's say hypothetically my house payment is $1,500 estimated. So what is a good reserve for that? I look at 1 month's house payment and any expenses associated with that. So I would use this method. I would say that $1,500 need to be in reserve plus another $300. Why is that? Well, that's $1,800. I have enough money available not only to pay the house, but also anything associated with that house. That's reserves. So if they say 1 or 2 months reserves, let's round it up. So if you had between $35,000 to $4,000 available, Guess what do you have available to buy a house?
Reserve fund.
You have enough reserves. What comes along with that?
Is that away from the down payment that they may have to put down or the closing costs that they may have to bring?
So
It's like, is that minus
separate.
that? Okay, so
That's
they need to have
something totally
reserves,
separate.
and then they need to be prepared to have the closing costs and the down payment, but understand that it is down payment assisted programs that can help
So
with those.
down payment assistant does not mean I have no money.
Right.
No, it means I have either closed enough funds for closing in reserve, or I have enough money for down payment and reserve.
Okay.
I don't have both, right? Or I may be a little bit short. I may have about $4 or $5 grand, which can cover some reserve and part of closing. Then it really takes a really great agent to say, hey, maybe if we can get some seller concessions to help out. And that's really taking the agent going above and beyond, because it's the seller in the market we are in now. Talking about current trends, we're seeing more seller concessions being given by the seller to sell the home.
Yeah, like up front before even
Right.
putting it on the market.
So you're seeing more sellers list their properties and offering funds toward closing.
Now, here's my next question.
Yes.
With that being the case, and it kind of will help determine, is this a seller's market or is it a buyer market? But before we get there, do you think that with having seller concessions, the best use of those funds is to go towards closing costs, or to go towards down payment, or to go towards buying down your rate?
So that's a great question. So the one thing you can't do with seller concessions is utilize down payment. That is, you have to bring your own funds, and the seller cannot contribute towards down payment. All right, they can only contribute towards seller concessions, like making improvements on the home or giving funds towards closing. So a seller concession does not mean, hey, I'm gonna give you $10,000 in closing. It could say, hey, I'll give you that washer and dryer, but it means zero value.
Yeah.
All right. Or it could be, hey, we will put a fence on the house, because that's something of significant value. So just because you're giving a seller concession does not mean it has to be financial and money wise. I'm giving something of value to the purchaser of that home.
And thank you for making that point, because I think it's so important. But with that point and having those funds, is it possible for the rate buy down from
question.
the seller concession?
So the reason why having your agent at times get you those available funds, it creates flexibility in order to put a deal together. So what if you actually secured hypothetically $8,000 to $10,000 in closing costs? Well, you can do a 2-1 buy down, 3-1 buy down. If you want to do it that way, you can help pay some of your prepaids, because closing costs are just that. It's closing costs. What are my settlement fees?
Right.
That does not include prepaids.
Right.
So, you get prepaids. And so if you want to pay all the sellers, all the seller and buyer cost for the purchase of the transaction you're closing, that could be substantial. It's not cheap to purchase a home. And I think with these programs, it allows the down payment assistant allows flexibility let's say if you have a borrower with $10,000. Well, closing part can cost $21,000. We'll secure that. So you have either a 3%, a 3.5%, or even now a 5%. So you have
down payment?
Yes, down payment assistance, okay, or 100% finance, whatever you want to call it, it's the same thing.
Right.
Okay, and the only difference is if it's forgivable or repayable. So when I say forgivable, what does that mean to you?
That I won't have to pay it back. It's kind of like a grant.
Exactly. So when you're looking at a forgivable, we're looking at more so of the grant, versus when I say repayable.
That means it's going to tack it onto that loan.
Right. It's what we call a piggyback loan.
Yeah.
Right. So all 100% finances is more of a piggyback loan to help the borrower secure financing to purchase their house. It's an alternate way of financing a home versus your traditional means of 5, 10, or 20% down. You're in a market right now where inflation's high, and what's the number one thing people complain about? It's funds.
It's funds. Yeah.
The lack of funds, because everything it costs a lot of money right now. So now you're seeing more banks get into the market and saying, hey, we're offering down payment assistance, which will help borrowers pull those into the home. And I think right now with the interest rates going down, and the potential election change in leadership? Well, there will be a change in leadership.
Yeah.
The change in leadership is coming. We're probably gonna see some new ideas and ways to try to pull the market forward. And the number one thing I think we all see is the housing market, because it benefits so many things. It's very lucrative, providing housing for people. But the one thing I want to end with is some of the costs that a borrower could expect to see when they're purchasing a home. And this is the reason why you have to have funds available.
And for perspective, let's you talk about the mortgage funds that they need to have.
Sure.
And I'll talk about the transactional side.
Absolutely.
So you go first.
So, the one thing you have to think of when you're purchasing, when you're looking to get pre-approved is you have to understand that nothing is private. There's no such thing as I'm going to present my bank statements and white out my name or black out my name or take out certain transactions. And there's no justification behind it, because you're looking to purchase a home. So the very first thing they're looking at is you're asking someone to give you $200,000, $300,000, $400,000, $500,000 based on what? Your name. So how is your name and what does it look like? Okay. So what are we asking for? We're going to ask for your most recent 2 paycheck stubs, right? We're going to ask for your most 2 recent bank statements. We're going to ask for your last 2 years W-2s, and we're going to ask for identification. Okay. Well, we got to know who you are, and verify that the information that you provided it comes from the person that we're looking for, because that's verification of identification of who you are. We got your assets, right? How else can you qualify for a home other than understanding that you have enough assets available to qualify, and your earnings are available, which is based on your W-2, not off word of mouth. I mean, we talked a little bit, like we dropped a nugget last week, about what's a pre-qualification, what's a pre-approval. Pre-qualification is what you said. Pre-approval is what you prove. Okay. So, I mean, I can say, hey, I make $4,000 a month and I have this, but what I can verify may be greater or less than. So,
and I think that's the reason why I'll always say it's so important to have a pre-approval letter prior to showing a property. And now with the NAR settlement situation as it relates to buyers and consumers on how that happens, I think it's more so just a benefit, because now we're separating the serious from the not so ready, I would say. Not ready at this point. So the expenses on the broker side, when you're getting a pre-approval, is they have to get their credit report. That's an expense.
$65. Yep.
Yes, and then going through that, once you gather all of your documents and what needs to be paid, what else can they expect to pay up front before we even start looking at a house?
So the biggest thing is that, some loan officers and some mortgage companies or brokers may or may not charge a fee for the credit report up front. Okay.
But it's going to be charged somewhere, especially on that settlement statement. It's always there.
This is what we call paid outside of closing.
Yeah.
Okay. So there are some fees that you'll pay outside of closing during the process. Your credit report's one. You may or may not have that expense, but you still have that expense on your bureau.
Yep.
On your closing cost.
On your statement, yep.
Second one is your appraisal. Appraisal is not up for negotiation. That is your report. It comes at an expense, and it depends on the city. It can vary. They vary.
And this is after you're under contract now. We're talking about those expenses. So before we get to the appraisal, because I kind of want to ask a question about that, is the home inspection.
That's something that comes from your side.
It comes from the buyer. I don't pay for home inspection.
Well, I'm saying it comes from an expense on that side.
I just wanted to clarify. But so the home inspection is a buyer expense, and generally they cost about $300 to $500, depending upon the size of the home and the inspector that you choose. And during that fee, you get a blast of information about the house. And during that time, it kind of is like your starting point to do more inspections or examinations of things that may come about. So I think that having that first home inspection is so important, but also having a budget really for any other things that you might want to explore. Because let's say, for an example, if you're buying land, well, yeah, you wouldn't really need a home inspection, right? You would need a perk test, or you might need an engineer to come out and look at the land to determine where you can build, where you can't build. Are there wetlands? Those type of things are inspections. So when you think about buying a house to build, you have to keep that in mind too, as far as an expense. On the single family resident side, just the home inspections and any of those inspections that come about that way as well. On the commercial side, just think of doubled price for any of the type of inspections that you want to complete. But during that time also, I think it's important to note the expenses that you don't really account for, like driving to the house, especially if you're doing new construction and you don't live near the house. Eventually those miles and that gas is going to count up. It's going to increase. Another expense could be your mind. And I know we're human. So when we think about and we're under contract, we're gearing towards purchasing a house. You start thinking about how you want to design that house and the things you want to include there. Do not purchase anything during the process, but go wild after settlement and closing. So on the transaction side, those are kind of the fees that you can expect. I don't want on this episode, because I think it'll be a greater opportunity to explain what you're looking at when you get to closing and what those fees entail. But the process of purchasing a house, just know you will have that appraisal cost on the lender side, and you will have that home inspection. My question about the appraisal: if you have to go back to re-inspect something, let's say it's not an appraisal that's as is, and it comes back subject to something, whose responsibility is it to pay for that re-inspection appraisal?
Right, that's a great question. First of all, everything related to the appraisal is a buyer expense. Okay, it's paid outside of closing. So even if the seller does not have the house, where it's an as-is appraisal, if a re-inspection occurs, guess who pays the expense? The buyer. All right. And unfortunately, you know, if I've had it where some situation where it may take a couple of times for them to get it right to receive that as is appraisal. So that kind of goes, usually the seller's agent will advise the seller prior to listing the property of the things they'll probably need to get prepared for
to be able to
prior to listing.
However, terms such as FHA, VA.
Right. However, even during that process, you can be as sharp as you want to be as a listing agent. When that appraiser comes in, they may catch something that may totally be missed by the selling agent. It does not make them, doesn't make them anything bad. It just, hey man, the appraisal is a professional to do this. And the appraisal is based on what they see. Yes. So their professional opinion.
Yes, their
of what the property is based on the data they collected.
Yep.
Okay. And once they collect that data, they put all those points in there that they've actually found to find the comps to justify the price and the value of that home. But they'll also put in the next section, there's a difference in the appraisal where it says as is and subject to. What do we want is an as-is appraisal, because the subject to is going to tell you the things that need to be done to receive that value. So let's say if that home is we want to sell that house we got to list it for $195,000. However, the appraisal based on the comp sees is worth $205,000 if
they fix the deck.
It could be something small. It could be, around the windows. If they have exposed wood around the window, guess what? They're going to have to repaint that window.
No peeling paint.
Yeah, no peeling paint. Or
and these are
wood.
On specific loan types,
yeah,
too.
Specific
just
loan.
Putting that out there.
Well, on conventional, let's say if you had an FHA loan, just hypothetically, have FHA client that, you're looking to purchase a home and there was some peeling paint on a deck. Guess what? You got to get that resolved in order to receive an as-is appraisal, because the goal...
But you need to get clear to close.
The goal is when the house gets appraised, you want to receive an as-is appraisal, because it makes it easier for all parties to reach that goal of getting clear to close. So,
and that's the only goal, is to get clear to close and close.
Yeah, that's the biggest expense we'll face on the buyer side prior to closing. You'll have a fee for your credit report, and then your next fee that you'll face from us will be the appraisal, and that fees comes. You pay that directly to the appraisal management company.
So in conclusion, whether it be on the financing aspect or the transaction aspect, what would be a good rule of thumb to say, hey, I am a ready, willing, and able purchaser? What would you say they need to have in reserves for the whole process?
Oh man, so
I have my number, but I want your feedback.
So let me give you the whole. I'm not gonna give you part. I'm gonna give you all of what I think when a buyer prepared.
Mm-hmm.
Okay. Know where you're at on your lease. Okay. If you just renewed your lease, are you prepared to buy a home? Let's be honest.
It depends, because
no, if you just renewed your lease, then you're putting yourself in a position to pay a penalty.
For me, the cost would be 6% of the purchase price, and that would include the fees that you would have to pay. That would need to include your down payment price, depending upon the type of loan that you get, and then also the closing costs. So that number, 6% of the purchase price that you're purchasing, would be a guesstimate, but still speak with your mortgage broker to give you that security of a better estimate.
For closing?
On what it would cost to purchase a house from start to finish.
Yeah, that's a good rule of thumb, because usually 3%, 3.5% to 3.5% for initial down payment, and probably about another 2 to 3% for closing costs. Mm-hmm. I think that's about right.
Yeah. So I guess that will wrap up what is in the market. Now that you kind of understand better the start to finish of purchasing a property, what fees are included on both the mortgage broker financing aspect as well as the transaction real estate agent aspect, you can secure yourself to purchase a home. So if you're interested in any market and purchasing it and securing your pre-approval letter, reach out to John. And if you're interested in any of the markets that I'm licensed in, it would be my pleasure to service you and help you reach your goal. Thanks so much for tuning in, and we look forward to the next episode.